there are basically two kinds of strategies to invest in an ETF for dividend investing, dividend stocks. There are those that are high yield dividends, and that's a nice name, high yield dividend. High dividend yields are a terrific thing because the more dividend yield you get, the more money you get, the more passive income you have. Who doesn't want that? There's a drawback to that, and then there are dividends, ETFs that focus on companies that don't necessarily pay the biggest dividends, but have shown the ability to grow their dividend yields consistently over many years. So that's called, usually called Dividend Achievers Index, dividend growth investing. And we need to compare the two. Now you see this chart here? This is comparing I'm using two very popular exchange traded funds in the dividend space. They're both from Vanguard. They're very popular. One is the symbol is VIG for dividend growth investing. And that one is the one here that's down 10% year to date. VIG is down 10% year to date. Now its dividend yield is 1.87%, which is very, very close to the overall S&P 500. The one that's down negative 19, that's the VYM is a symbol. That's Vanguard's high yield dividend ETF. And that one's down 19%. So you see the difference by getting a little aggressive on trying to get more dividend yield. That one right now pays a 4.45% dividend yield, so more than double the dividend yield of this one that's down 10%. But look what's happening. They're down, investors in that are down almost 20% of their money in the portfolio. So even though you're getting 4.4% now, 4.45%, you're doing that. It's actually more risk by going for the higher dividend yield, because the kind of companies that pay higher or fat, let's say juicy dividend yields, are often the companies that don't have the same growth opportunities or growth markets that other companies have. So they don't really have much to do with their money, and they're often just defending the market share that they have, or they're not reinvesting in their business and saving that money so that they can buy a different company that could help kickstart their growth. So if you take a look at the negative 12, that's the S&P 500. So dividend growth investing has outperformed the S&P 500 by a little bit, and I like this particular way better in terms of dividend investing, and that's my own preference. And the one again that with the high yield dividend investing is down 19%. So that just goes to show you where the money is going. So